Hello everybody, welcome to the trade recap. I got a lot of questions regarding how I entered on December 31st, the day that this is being recorded. And this video is pretty much just going to break that down, going from top to bottom. Now I'm not going to waste your guys' time, we're going to get right into it, and it's going to be short and simple. So looking at the daily chart on the NASDAQ and the Dow, we have the NASDAQ on the left and the Dow on the right. As you can see, we have a daily TPD right here. And the reason why we are using the Dow and why we are able to use the Dow, because normally in these past couple of months I've been using strictly the NASDAQ and the S&P. But the reason we are now able to use the Dow is because the markets are back in sync in regards to premium and discount. So whenever you have kind of a wonky asset, that's what I'll call it, in the triads, for example, the Dow typically moves on its own in the futures triad, and the pound typically moves on its own in the forex triad. Whenever they are in sync in regards to premium and discount with the other two assets within the triad, that is whenever they are best used. So as you can see right here, we have our range high and our range low. Price trades into premium. We form that TPD on both assets. And the reason why you would pick this high right here is because on the NASDAQ, that is the swing high that formed in order to make the range. So the reason why you would want to see this TPD right here is because this establishes narrative for downside movement. Now looking at the hourly time frame, within that daily TPD, we had an SMT. As you can see on the left, the NASDAQ made a lower high, and on the right, the Dow made a higher high. So this confirms the TPD and makes it even higher probability. So zooming out a little bit more, we can see the bigger picture. We have the SMT at the top that we just outlined, and we can see bearish momentum on price. And then we have that sell side liquidity that was outlined last night, that 21,006.5 level is where I want to see price draw towards. And as you can see today, we got a little bit of movement down there. We haven't fully reached our take profit per se, but there is a high probability that we are still going to reach that area, and it is still our draw on liquidity. So now we're going to zoom into this portion of price action that is important. All right, so now we're looking at the 15-minute time frame on the NASDAQ, which correlates to the daily cycle. And as you can see, we have our true day open marked out right here. So coming in today with the bearish narrative and bearish expectation, any delivery, any price delivery above this true open, we would automatically see that as the daily manipulation before the daily distribution downwards towards the draw on liquidity that we had outlined the night before. And as you can see, above that true day open, we formed intermarket sequential SMT with the Forex triad. Now, similar to how you would use SMT and PSPs with Dow, as I just outlined, the triads must be in confluence with premium and discount. If you go back and look at your charts and compare the Forex triad to the index futures triad, they were aligned when it comes to premium and discount. So that is why this intermarket sequential SMT held and tipped its hand at us, telling us that price was likely to turn around. Now bringing the S&P into the equation, as you can see, as soon as the NASDAQ wicked above previous quarter's high, which is London session, we formed a 15-minute PSP. Now, the reason this PSP is important and the reason why price ran the high one more time is because it was a large wick that took out the previous quarter's high. Whenever you have a PSP that forms an SMT and that PSP wicks the high or the low, price is likely to run that high or low one more time before making the true reversal. And that was the entry. So price wicked above the previous quarter's high, and then I expected it to run that high one more time, and then that was the entry. And even if you missed that entry, as you can see, what have I taught you guys in the Back to Basics series? Whenever you have a new week opening gap and a fair value gap, in confluence with one another, that is very good for continuation trades. So you could have entered right here and then took it all the way down to this minor sell side liquidity where I told everybody to take partials if you got on board with the move. And also there was a breaker in confluence with this as well. So this was a very high probability trade. Now it did form a little bit earlier in the quarter. So generally New York AM session, which is Q3 of the daily cycle, that is where you'll find your high probability setups. And whenever you are trading on low probability days like today, you will generally find that your setups that look like this will form earlier in the quarter. So that is something for you to backtest and something for you to dive into. But that is all for the price review. Let me know what you guys thought of this lecture. If you disliked it, if you liked it, please let me know, because this is how we will probably do price lectures and pre-recorded lectures from now on. So that will be all for this one. Good luck and good trading.